Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 181. We're going to talk about today about the FOMO trap. So fear of missing out, and we've seen a lot of this in this entire rally, more towards the last 4 or 5 months, where we have seen investors flocking towards stocks which have crazy valuations from any which way of valuing them and lining up for them and burning their hands. So we'll see some charts and some learnings from there. But first, a look at the markets today. Markets were very choppy today, almost like a rare day where we have three very strong legs. First going up, coming down, then going up again, and then coming down again. So three legs of choppiness: down, up, down, and pretty severe moves in that. So I think market is still very nervous about this Ukraine thing. Russian media is saying we are pulling out. US media is saying no, you are going in. So there's all kind of confusion there. Meanwhile, most of the sectors were either flat or soft, except for reality and some move in pharma. But banking was majorly hit, with PSU banks losing 1.2%. And this is surprising because PSU banks were the ones which were showing strength just a few weeks back. For a complete last 1 month period, they're still the only sector which is plus 2.9%. But of late, in the last few sessions, a lot of damage is getting done here as well. Real estate, which has lost a lot of ground in the last 1 month, minus 10.6%, is crawling back up. Also, every management that is coming on with the earnings call and the narrative has been around inflation for most of the management speak, and that probably is going to fuel some rally in real estate. I'm speculating here, but a very, very choppy and sort of a tough day to trade, especially for those. I'm hearing a lot of option players losing a lot of money today. So I will only say that always do some risk management and know what kind of losses are possible with what kind of strategies. The only bright star in today's day was small caps, where the small cap index closed 0.76% up. It was much higher during the day. Mid and small cap index was also flat at 0.13%. Rest all larger caps were falling 0.2% or so. And the similar move was seen in the weekend investing small cases, where MI25 and MI35, the two only small cases, went up almost 1% each. MI20 and MI50, which are both small and mid cap strategies, also saw gains of 0.4 and 0.8%. And rest of the strategies, which are more larger cap in nature, were down in the red. So coming to the topic of the day, the FOMO trap. So I've been charting these new age IPO listings, several of them: Paytm, Zomato, Nykaa, Cartrade, FinoPB, and several others. And I'm seeing that they're just hitting 52-week lows almost on a daily or a weekly basis. And my sense from a momentum perspective or from a trend following perspective is that whenever you find stocks hitting 52-week lows or all-time lows, those are definitely signs, warning signs, that this stock may have some issues, may be going further down. At least if not a sell signal, it definitely tells you or the price trend is asking you, why are you not re-evaluating me? Because I am going down. So allow the price trends to, tell you when to buy, when to sell, or at least question your thesis when this is happening. So don't be afraid of stocks going up, be afraid of stocks going down. That is all that, I want to say on this. So this is the chart of the last 2.5 months. And just see the kind of damage. Paytm is down in the last 2.5 months by 46%. Zomato is down 43%. Nykaa is down 38%. And Cartrade is down 33%. This is the kind of, damage that is happening purely because people flock to these counters without neither the uptrend was established at any point of time, so technically also they were not sound, and fundamentally, of course I am no fundamental analyst, but from what I hear is they were IPO'd at crazy valuations, they opened at crazy valuations, and yet people want to buy them because the feeling of FOMO is there, that you'll miss the next the digital India train using these instruments or stocks. Another very nice case study was uploaded by Charlie Bilello. He's a very popular Twitter analyst, and he gave an example of Twitter stock itself. Just see this. So IPO of Twitter came in 2013, almost 9 years back. We are virtually at the same price, slightly lower actually. So no gain in 9 years. When it was launched, market cap was 500 million, now it is 5 billion. 10 times, sorry, the revenue has increased from 535 million to 5 billion, 10x, yet the price is still there or lower. In terms of price to sales ratio, it started at 41 times sales, 41 times, went to a high of more than 60 times, now is at 6 times. So all these, FOMO type of purchases that people make, sometimes or a lot of times, when the ratios are even absurd for non-fundamental following people like me, I mean, you have to take a step back and see what you're doing. It's your money actually, but either you follow the trends and say bhav bhagwan che, if it goes down we'll get out, if it goes up we'll get in, simple as that, or at least you make sense of the numbers that you are following. You're buying some stock at 50, 100 times sales, it can never make you money. At least I kind of believe that, unless you really get lucky on that. So idea is to show you what kind of FOMO impact is having on portfolios. Investing is trends is all right. If there's a new trend in the market, you can invest in it, but have a plan around it. Otherwise it can be a recipe for disaster. People tend to invest into popular trends assuming there must be something good about it. Everybody's talking about it, so let's buy it, and everything will be good after buying it. And it may so happen that if LIC IPO is badly priced, it may do the same. But a lot of people will just buy it because LIC is coming to the market. So investment should never be done either in FOMO or in greed. It should be done on sound principles of either value investing, fundamental investing, growth investing, momentum investing, whatever kind of investing, but have some rules around it, please. Neutral approach towards investments with a plan can yield both peace of mind and rewards in the longer run. So if you think that you are not made up for doing this analysis and executing it yourself, give your money to a mutual fund, give your money to a PMS manager, follow some small case manager. There are so many options. You don't have to, get wrecked just because you cannot follow the the fundamentals or the technical part of the market. It's a tough market to play. It's not easy to make money in the market. Sometimes we get a wave of a bull run for a year, 2 years, and everybody starts to think that they can make money every day and every year without a problem. But that is not the usual case. So my advice will be, please assess your situation and choose the right vehicle, choose the right advisor who can advise you on having a plan and executing that plan. So with this, I close this daily bite. Thank you so much for watching, and I'll see you in another video. Bye.